It's Sunday, the 8th of April 2018. It's been a fairly choppy fortnight for the gold price again, failing to sort of consolidate above that 1355, 1360 sort of level after it broke out of this little triangle a couple of weeks ago. I think that was in the last video I talked about. And it's come back, and now it's hugging this trend line around that sort of 1335 mark. Went up a bit on Friday night with the weak US job numbers. If you remember the last video, I talked about how I was using this similar sort of consolidation pattern in 2016, around the same time actually, in the first quarter before it broke out again. April is historically a pretty good month for the gold price. Sort of April, May is one of the peak periods, I guess. Gold does tend to have these seasonal patterns somewhat. But obviously it struggled there. And a couple of interesting things. I know on Wednesday night Australian time, it was gold price was rallying very, very strongly after that Chinese trade news came out that they were, announcing trade tariffs on soybeans and various other products. But then, by the time on Thursday morning Australian time, we'd given back all of those gains when it was heading up toward 1350, and then it closed back toward that sort of 1335. So there's kind of this, and the US dollar obviously strengthened as well. So there's kind of this, I guess, buying the news, saying that it had already been factored in the markets, but I don't really think it has. I mean, everybody's been anticipating that. The same with the dollar. So the dollar strengthened on that news, and it's sort of struggling around this. Had a little bit of a bit stronger than normal there. It's probably the strongest it's looked in the last couple of months, as it's sort of held above that sort of high at the high 89s there, and wanting to push out above 90, but still sort of struggled on Friday night Australian time with the US markets down, I think 2 to 2.5% again. So yeah, there's not a lot happening there still, but it did starting to look a little bit more bullish. But with the US market struggling and no obvious signs of any real strength there, I don't think the US dollar's going to be breaking out strongly. S&P 500, really coming back, and it's testing that sort of that 200-day moving average, which is somewhere around this 25.80 sort of level, I think. Yeah, 25.90 there for the 200-day. So it's holding that still, but it's looking very precarious here. This massive gyrations, sort of 2% up days and down days for the last couple of weeks. That's not a sign of a bottom. You don't want to see these big candles here. That's still an indication that fight is still going on. When you start to see some small ranges and and sort of the bears might be giving up a little bit, then that's when you probably start to see a bottom here. If you remember my last video, I was sort of talking about, I think if we follow that .com bubble type scenario back in 2000, 2001, I'm sort of thinking this keeps going up. I think it's made the all-time high for a while, and I think we might rally up toward this sort of 2700 sort of range here, and maybe by mid-year, sort of June, July, we start to have the real down move here, and that's going to last a while, I think, given the overvaluation. I was looking at some of the some of the bellwether type stocks just before, and just actually I think that's the wrong Amazon. There's another one here. So this is the Amazon chart. I mean, you can see just how ridiculous this got toward the end of last year. And from October to the start of March, Amazon was up 60%, the stock. So that's a clear indication this has really reached sort of parabolic type trend here. It's only given up. The stock's only given up 15% from the all-time high. So there's a lot of, and I think Amazon, some of the weightings of these stocks now are huge in the indices. And the same people are playing the same names. Amazon, I mean Apple again, but Apple makes a lot of money. But even then, Apple's only what's that, about 7% off the all-time high. So there's a lot of room, a lot of downside in some of these stocks still. This move hasn't really shattered the confidence of investors yet. Google is looking pretty bearish. Again, it's kind of a very similar chart to the S&P in general. That's down about 15%. So that's really sort of matching the S&P, but there's no obvious sign there that it's bottoming either. Netflix, I think, is the other one that looks very much like the Amazon chart, and then that's up. That was up 60 to 70% since the end of 2017. So in 3 months, the stock up 70%. And I don't know what the market cap is of Netflix, but it's in a couple of $100 billion sort of range US. It doesn't really make any cash flow, and it doesn't make any profits. So I could talk for a while about that sort of stuff, but just making the point here that these bellwether stocks are not very far off their all-time highs. So there's a lot of downside here still. So anyone sort of saying buy the dip, and that some of these companies are now under regulatory pressure as well. Particularly something like Amazon, where Trump's targeting it. So these companies they've led the S&P 500 up, and they're going to lead it down as well, because they're just such a huge weighting now in the indices. So yeah, I can't see, with these companies coming under pressure, I can't see the S&P 500 rallying strongly given the high valuations. So that's sort of just an aside there, I guess. Some of the Australian dollar's looking pretty poor again against the US dollar, even though US dollar is not really showing heaps of strength. Australian dollar is sort of still in this mid 76 range. I think last video I was sort of talking about heading toward this lower trend line here, and I can't see that. It looks like it wants to keep heading lower here. So that's not a lot happening there. I think the data's been largely in line with expectations, and interest rates are not doing much. The gold price in Australian dollars has done fairly well above. So I think the last video I talked about it breaking, it's held above the 1720 level that we've been stuck with under for more than probably about 18 months now, and it's held that now and looking very strong here. And I'm expecting some sort of decent move here now. We're out above 1720. The chart looks excellent, and then most of the Australian gold producers are doing well with that. So in the past, we've seen these strong moves. The gold indices still not really getting a lot of love, even though the gold price is holding pretty strongly. GDX still in that bottoming, showing a little bit of strength there, up maybe 5% in the last couple of weeks. Potential for a bit of a continuation pattern there, a little triangle forming, but still not a lot going on. Just delete that moving average. GDXJ, I think, is the same. There's not a lot happening in that one. And I think I made the point last time that anyone who says that the gold, people are flocking to gold and speculating in the gold market a lot, still there's very little interest here. The stocks are the one that people want to speculate in. If they want to play the gold price, you speculate in the mining stocks traditionally, and these indices are flatlining still, and there's very little interest. So one other thing on that gold price chart, if I can bring it up there, it's not there. Just the symmetrical nature of this bottom. I think in a video maybe a couple of months ago I talked about how I'd read something that the best sort of head and shoulders type bottoms, or I think we might call this sort of a diamond bottom pattern, tend to be symmetrical, and the length of the length from the down on the downside there from sort of June 2013 to December, the ultimate low in December 2015, it's sort of in that, what's that, about 30 months, and we're about 28 months in now from that bottom, so more than 2 years. So ultimately that would sort of mean, again, June 2018 was when we sort of complete the symmetry there, and that should be when we start to move higher. And I do tend to agree with that in general, that the best sort of bottoms are that symmetrical type sort of formations. You can see here, this is a very, very good sort of symmetry. So I'm looking, I think we're still heading stronger in here. I think the macro environment is still very positive for gold. With the trade tensions are still there. US share market still looks toppy despite sort of these gyrations where they're trying to rally it back above 2600, but it's really struggling here, and I don't see any immediate catalysts on the upside here. It's short-term moves, but the broader trend now is down, and that's what I'm continuing to expect, and I think that'll be positive for gold. And I'll do another chart of a couple of the local producers that I'm interested in at the moment.